Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance. Where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We have had an incredible week in the market, one for the record books, to be entirely honest, and I'm excited to go over why, what it means for us, and what the outlook is for the rest of the year. But before we do that, before we get into the market news, I want to go over some big changes that are happening at 77 Financial Group. Really excited, like beyond excited. For those of you guys who have been with us from the very beginning, I started this company in my parents' basement, when I was 26, 25 years old. I got a giant job offer at a very small boutique investment firm, managed just $1 billion when I was 24, and I worked there for about 2.5, 3 years, and then I started my own company, which is now 77. And so through the last 4 or 5 years that we've been doing this, it's been quite an uphill battle, but we're here, and things are moving, and it's finally really all coming together. And so I'm really excited about some of these changes that I wanted to tell you about. And that's also why we haven't been around. That's why their podcast hasn't been going on. We're just so busy. We're swamped with business changes, upcoming opportunities, speaking gigs, etc. And I'll go into all of that. But some of the changes that we're doing that's going to benefit you guys that I'm really excited about is, one, we're creating a YouTube segment. So YouTube, Rumble, pretty much anywhere where you can watch podcasts. We're going to have a segment every week on Tuesdays called Two Gents, 2 Cents. Okay, so it's going to be me, the investment executive at 77, and then my business partner, Brandon West, who is a CPA. So we are basically going to cover all things finance, personal investing, taxes, accounting, etc. The boring stuff that's actually exciting on our end to help you guys, right? So we want to provide that informative content that we can. So 2 Gents, 2 Cents every Tuesday. That's coming up, and I'll let you guys know officially when it's released. We already filmed the first episode, but we're trying to figure out the best way to just get a consistent schedule of implementing it. So probably sometime in June, and I'm really excited about. Next, we have the newsletter. Okay, so look, we manage people's money. People give us their money. We invest it. We allocate it based upon their risk tolerance, their time horizon. What do they want, right? Do they want hyper growth? Do they want dividends? Do they want income? That's basically our business model. We pick good companies. We put them in these companies, and we monitor it is essentially the process. As simple as I can make that. We're wealth managers, right? Well, some of you out there don't want a financial advisor. You don't want a wealth manager. You want to do it yourself. But maybe you want professional opinion, professional insight. Well, that's what we're working on here. The Trading Desk. It's going to be 77's newsletter that's coming out soon. Every month, we're going to lay out an episode going over what happened that month, or what's going to be happening that month. It'll be forward-looking. So between the 1st and the 5th, a newsletter will come out, and you're going to get market news, important events for that month, economic dates that month to keep track of, stocks to watch. That's going to be a big one that we're really invested in. So every stock, you might wonder how companies decide what stocks to watch, what companies to watch, what companies to put money in. Well, that's what we're going to go over. So every month, you're going to get 1 to 3 different companies that we basically give you our professional analysis on, right? Why is this company good? What industry is it in? What's their fundamentals, earnings? What's their revenue look like? How often do they pay off their debt? All that boring stuff in one location. And then you can make a decision yourself. Hey, do I want to invest in this company? Do I not? Etc. We may or may not invest in those companies, but we're definitely watching them. Okay, we're definitely watching them. And we're really excited about that. It's going to be called The Trading Desk, the newsletter. And I really encourage you guys to subscribe to that. Okay, even if you listen to the podcast, that's going to get an insider perspective of what we're thinking when we're making these investment choices. So once that comes out, there'll be a huge early bird sale. It might be like 40% off. I think we're looking at $9.99 a month or $100 a year, right? So not that bad at all, especially if you guys are going to be getting professional investment advice from that, or I guess just general market guidance. Again, none of it's personal specific advice, but it is going to be basically an inside look at how we as a firm make decisions on these companies that we're investing client assets in and ours, our own personal money. So that's really exciting. I'm super excited about that. That's the stuff that I love, right? Evaluating companies. We're looking at their annual reports, their quarterly reports, 10Ks, 10Qs. We're going through pretty much everything before we make any sort of recommendation to watch this stock. Yeah, really excited. Again, you guys will get a discount because you guys are podcast listeners. So just be looking for those updates and those newsletters. It'll be coming out. It'll be really, really good. Okay, with that said, we are back at it, guys. Twice a week. We got 2 Gents, 2 Cents on Tuesdays. And then at the end of the week, we're going to be doing 15 minutes of finance, okay? And guys, this week, I just want to jump right into it now. I've done my shameless plug. We have had an amazing, amazing week. So let me just read this general market outlook for you for this week, and we'll go over it. This week, the stock market experienced a mix of movements influenced by key economic data and Federal Reserve developments. The U.S. stock market reached new highs for 2024, driven by strong corporate earnings and easing inflation concerns. The S&P 500 saw significant gains, underpinned by a positive outlook for corporate profits and ongoing economic growth. Inflation data showed signs of cooling, which reinforced expectations that the Federal Reserve might consider cutting interest rates later this year. However, the Fed remains cautious, looking for more consistent improvements before making any policy changes. In the bond market, U.S. Treasury yields fell, reflecting lower inflation expectations and increased investor confidence. Meanwhile, Japanese equities were noted for their potential due to rising inflation and ongoing corporate reforms. Overall, while the markets have shown resilience and growth, especially in the U.S. equities, the economic landscape remains sensitive to upcoming inflation data and Federal Reserve policy decisions. Okay, what does all that mean? Real quick, I think it means that the rest of the year is, I still think we're going to go higher. I think the S&P is ready to push, which is both scary because it probably shouldn't, I would say. We've already hit new highs. It probably is due for a little correction, but I think it's just going to keep pushing higher. There's political elements to that. There's just profit elements to that, and also just, I think with the Federal Reserve dealing with the Treasury rates, with the interest rates going down, that typically positively affects the market. So there are quite a few things that are probably going to push it higher. And guys, full disclosure, I've been saying it's going to go higher. It's going to go higher for 18 months now. Okay, so even when we were in recessionary periods of like 3,900, 3,800 for the S&P, I've said, hey, look, I think it's going to keep going higher. I think we're on our way up. Almost none of the big investment firms said that. And you can go back and Google these articles, okay? Goldman Sachs, Vanguard, JP Morgan, anybody you want to use as a reference for investment banking, they all said, yeah, our outlook for 2024 is probably like 4,700. It's probably, going to stay relatively unchanged. And in my head, I'm like, well, I think it's going to go 5,500. I think it's going to go even higher. And so now, within the last quarter, all of these investment banks have said they've changed their outlook, right? Now, some of them have it at 5,700. Some of them have it even higher than that at 59.6, that would be absolutely insane. And if that happened, I would definitely assume a correction is coming. But it's possible, okay? It's possible. So not saying I'm always right, but in that scenario, that was definitely I was definitely on the nail with that, which, again, it's not always going to happen. So I got to take my wins. I got to take my wins and pat myself on the shoulder when I can. Yeah, so the market's probably going to continue higher. And using Vanguard as an example, I have a buddy here who wanted me to speak with his Vanguard advisor. Just like, hey, is this guy, are they leading me the right way? Guys, a lot of those tele-advisors or robo-advisors that have managers, quote unquote, recent grads trying to pass their investment exams, so their securities exams. A lot of them don't really know what they're doing. So I'm talking to this guy about, well, why is he in 40% international funds? Like, why isn't he in hyper growth? He's 27, 28 years old. Why isn't he in the most aggressive funds he can be in? And his answer was, well, we seem to think that international markets are going to outperform the U.S. And in my head, I'm like, what are you talking about? I'm thinking of wars going on in other countries. Okay, China is manipulating their whole market. They have company like NIO's an example. You guys hear me preach about NIO. NIO's killing the game, and yet their stock's under $5, which blows my mind. China is just manipulating their stock market. War in Ukraine, war in Israel. Greece is darn near going bankrupt. Poland is darn near going bankrupt. So they're talking about these international markets like they're going to outperform. International markets, I think year to date is 20% growth. S&P's 29%. Right, so it's still 2/3 performance essentially of the S&P, and this is the crazy part. What are we? 66%. I think we're 2/3 of the population of Europe, the U.S., but we double their spending. So we spend way more than them, and we're half the population, roughly. Maybe 2/3 of the population. So I'm just not big on the idea of international investments. Now, that's not to say I don't think there's diamonds in the rough with these international markets. India is a great example. I think India is killing it. I think India is definitely a international market that I would consider investing in. Need to know a little bit more, but I definitely see that trending upwards. They are really, really intentionally trying to work on the free market space of their country, which I love that, right? Anybody who's trying to change their economic environment to a positive, like a free market system, you want to invest in them. So I'm definitely looking in that direction. And then like the market recap we just had, Japan, look, in the early 90s, mid 2000s, they had a great run with the tech stuff, right? You had the TVs, the PlayStations, the Nintendo, cars, right? Toyota, Mitsubishi, they were killing it with the distribution game. And honestly, some of their stuff it's pretty good quality. I mean, Camrys run for a long time. Toyota Tacomas run for a really long time. So Japan, I think that's a great opportunity too. Is it as good as India? Probably not. But yeah, that's my opinion as far as where the market's trending. And I just still think the U.S., the rest of the world follows the U.S. I hate to say that, but especially economically, they do. They just do. And with the treasury rates, man, I love treasuries right now. I love treasuries. I would tell you, if you're thinking about I want to get, a guaranteed percentage out of my investments, CDs are not the way to go. Okay. Here is why. Treasuries. Okay. You do not have to pay state income tax on treasuries. You just have federal taxes. So if you got $1 million in a treasury bond, say that's getting you 5%, you only have to pay federal taxes. But if you have a CD that's getting you 4.9, you have to pay a fee for that CD first and foremost. Second, you have to pay federal and you have to pay state. Okay? It sounds good, right? It's directly with your bank, but you're overall not getting the bang for your buck. Treasuries are the way to go. Almost all of my clients are in treasuries. Excuse me. And I'm a big fan of them for a short liquid cash position, right? So just rolling over stuff every 3, 6, 12 months, I think that's the move to go. So treasury rates, as interest rates go down, which they will, treasury rates are obviously going to go down and they're going to be less valuable and the stock market's going to go up. Okay, let's look at some companies that went IPO this week because I got about 2 minutes left and I really want to talk about Nvidia. So Salesforce, Nvidia, Best Buy, Abercrombie & Fitch, which all of us millennials know was the middle school clothing company to go to. Okay, middle school. I lived in a small town 2 hours away from an Abercrombie & Fitch. Every summer, I was like, please, let's go there. I only ever got to go there once or twice just because it was such a far trip. But yeah, that's a fun nod to Abercrombie & Fitch. Nvidia, guys, this is the world's third largest company. It's bigger than Amazon. Who else is it bigger than? Facebook or Google, Alphabet? I don't remember who it's bigger than, but it's huge. Okay, it's huge. They're the third largest company. and they just decided after their earnings report on Wednesday that they're going to do a 10-for-1 stock split. So that means if you own one stock, which at the time of them saying it was about $1,000, you would have got 10 of them. Okay. This company is going to the moon. I really believe that. I really, really believe it. This is a stock to watch. A lot of my clients are in this. A lot of the people that work at the firm, their money is in this. So it is a very expensive stock until this stock split happens. Okay. And usually after a stock split, there's a drop. And then if the company's good, it'll trend back upwards towards where it was before. $1,000 for a stock position is expensive. Okay. So overall, the whole AI market, very, very confident in it. Okay. It's going to be a roller coaster ride though. Okay. That's not going to be a straight shot up like a ladder. It's going to be more like a roller coaster. And if you have a long time horizon, it's worth taking a look at for sure. But Nvidia, guys, they tripled their earnings. That's absolutely insane. I've probably never heard of that, especially for a company as large as them. They basically have a monopoly on the chip, the AI, the conductor space. Big fans of them, and other companies will follow. Right, that whole industry will probably be boosted up by Nvidia. And this isn't specific advice to buy Nvidia, but definitely watch it. Okay, definitely watch it. This is possibly for us millennials. This is like the Apple, the Facebook, the Microsoft of our generation. We didn't, what were we supposed to do in 2008 whenever the market crashed, right? We were in 8th grade. We didn't know what was going on. And I think if we can try to pay attention to this AI space, this will be the money moves for us in 10, 20, 30 years. This could be a Microsoft move. Because everybody knows if you invested in Microsoft in the 80s or 90s, you are sitting pretty. Same thing with Apple. Apple in 2000 was 83 cents. Guys, that's all I wanted to talk about today. Okay, so get excited about investing. Get excited. I know we're at market highs, but again, my opinion is it's still got time to go higher, and just take the time to invest now. Okay, invest early, invest often is the saying of the firm, and we're really excited to have you. And we hope to see you over at our new segment, 2 Gents, 2 Cents. And again, check out our newsletter, The Trading Desk. It'll be live sometime in June, and it'll be on our website, 77financialgroup.com. Guys, as always, we will see you next time. Invest early, invest often. Have a good one.